Today's episode is brought to you by Stream by AlphaSense, an expert interview transcript library that integrates AI-generated call summaries and NLP search technology so their clients can quickly pinpoint the most critical insights. Start your free trial at www.streamrg.co/PMC. That's STREAMRG.co/PMC. This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet MicroCap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet MicroCap, please take 2 seconds and give us 5 stars on Spotify or Apple. This helps with the search engine so that more folks can also discover and engage with all things microcap stocks. Our next investor conference is here. The Planet MicroCap Showcase Vancouver starts tomorrow on September 6, 2023 at the Fairmont Waterfront, Vancouver. The agenda is set. Speakers and presenting companies are excited to share with you their insights and latest corporate updates. If you'd like to join us either in person or tune in to any of the webcasts, please go to planetmicrocapshowcase.com. See you in Vancouver. Now, my guest on the show today is Donald Porter, portfolio manager, and most recently an equity research analyst at Wellington Management. I'm extremely grateful that I've had the opportunity to host this podcast for the last 8 years. And I say this because this really sounds crazy to say. I last hosted Donald on this show in July 2016 when he was at DGHM to discuss his first white paper, MicroCaps Value Uncovered. We were reconnected by Doug Porter from Acuitas Investments. No relation, by the way. Thank you, Doug. And it just so happens that Donald had updated his white paper on why microcap stocks still present a compelling investment opportunity in 2023. We chat about the current microcap environment, international microcaps, his quick takes on various sectors, and more. Thank you again for tuning into the Planet MicroCap podcast, and please enjoy my conversation with Donald Porter. Don, thank you for joining me today. How you doing, man?
I'm really happy to be here.
No, absolutely. It's been a minute. I mean, look, as I said in the opening, I last had you on here in 2016 talking about the white paper that you published then. That was what was it called? The MicroCaps Value Uncovered.
There you go. Yeah.
So now you're back. Actually, we're going to be talking about another white paper that you did here. So, I mean, just to kind of kick things off, like I said, it's been 7 years since we had you on the show, probably 7 years and change.
Crazy.
Freaking crazy, right?
It is.
So much has gone on since then. So love to get your kind of just 7. I mean, it's a lot to kind of process. So much has happened during that time. But in your opinion, since, writing that first white paper in 2016 to the one that we're going to be talking about today, what has changed in your opinion, or has anything changed at all with regard to microcaps?
I mean, I think microcaps suffer a lot from neglect, and I don't think that has changed dramatically. I think one of the things that happened, in the last few years, we had that SPAC boom. And so that actually created new issuance in the space. And one of the things that microcaps suffered from, the whole equity market suffered from, was just a sort of declining number count of names. And I think that has steadied itself, especially with the SPAC. And the SPAC thing was also, there was a lot of low quality stuff coming out. So I wouldn't say it was always a good thing, but the universe has definitely expanded a little bit, I would say. But it's been very tough for, I would say, smaller managers to survive. And so I think you've seen some smaller managers leave the market or exit, which probably creates more opportunity in the long run. But it's definitely been an area that has neglect, has inefficiency. I don't think that's changed a whole lot. But yeah, that's.
Yeah, no, and I very much agree with that change. And I would even go so far, especially in the last 2 years, is that, I'm putting this out in my editorial for Planet MicroCap Review, but I basically was like, in November 2021, there's just too few quality ideas. So you're just kind of like, all right, well, where's my real opportunity set here?
Right.
So now there being too almost too many quality ideas. But at the same time, you're at a point where, because the sentiment's so negative, and this is, microcap, we go through that, right? Like we have these cycles of just like complete negative sentiment, and then just there's absolutely no inflows. So it's forcing managers either to just like completely change their strategy in order to get inflows, where now they're, micro.
Right.
Right.
Yeah. I think the benchmark also has something to do with it. I mean, the hard part here is that small and micro have outperformed over the very long run, but in the last decade, they've suffered to the overall market. And I think that has been a headwind for the space. But I think it's more sector related. I just think that, the microcap index has a massive weighting to healthcare and biotech, and the larger cap indexes have a much bigger weighting to technology. And so that explains, I think, a lot of that discrepancy. But that's also been, I would say, an overall headwind.
Yeah, I mean, well, I feel like, and this is more of just this is an opinion. I don't really have any anecdotal evidence or whatnot, but just in observing, I'd say in the last year, especially since capital's been it's been expensive, every investor is now starting to become privy to like, all right, the company puts out great news or anything like that, stock pops a little bit, that shelf gets filled right away, all of a sudden, there's and it's what's like, if you look at the long run, you're like, all right, you almost kind of want some of those companies to be doing that, because all right, okay, whatever, they're getting their growth capital now. Hopefully that sets them up for the next couple of years, or at least 2 years, but at the same time, you're just like, oh, man, as an investor, like, that's so frustrating. It's like, wait for these catalytic events, and for stock that you've been owning forever, and then they use that to go and raise capital, and you're like, oh man, like,
I still think, though, largely speaking, I mean, companies that deliver over the long run, no matter if they're small or big, are going to work. I mean, that with so that hasn't changed.
That's been more short term. That's been more like short term observation, especially if you're like, doing starter positions, and you see maybe a special set or something where you're like, all right, 6 months down the road, like, all right, if that works out for that company, great. But then, there you go. They're So let's transition into your white paper that you just put out for 2023. Basically, it's basically microcaps for 2023, right? So I mean, what would you say is the primary thesis of this new white paper as microcaps exist here in 2023?
Again, I don't think it's changed dramatically from the original, but I would go back to, I mean, the space is fascinating in that there's a lot of names. That's the most kind of obvious thing. You've got 1,500 stocks in this universe, which is far more than a large cap manager would look at. And so from a stock picking standpoint, you have a lot more options to choose from. So I've always thought it's a very rich active manager pool to look from. There's a lot of bad companies in this space, a lot of companies that don't make money. So you again want to avoid typically those lower quality companies with indebted balance sheets that are capital hungry, and focus on the ones that are well run. And I think you live and breathe this inefficiency. I mean, a lot don't have any sell side coverage. Most have, the average is 3. You compare that to a Boeing, they're going to have 22. So it's just like when information breaks on a microcap stock, and you can see this. Let's say a CEO moves from one company to another, and they're really good. The stock may go up, but it doesn't go up that much. And you can kind of look at that and go, hey, I know that individual. I know that he's a good manager. He went to a company that wasn't that good, but I think he has the ability to make significant change there. That's something I want to invest in. And that information is going to take a longer time to disseminate. Where in a bigger company, if it's a railroad and the railroad guru goes to, Norfolk Southern, all of a sudden that stock is going to reflect that change very quickly. And so I think you've got a little bit of that going on in microcaps, which explains a lot of that inefficiency. And we often talk about liquidity as being a real headwind, but I think it is for the really small stocks, but the average size fund usually can move in and out of these fairly quickly, I would say. So it's an issue, but I think sometimes it's exaggerated. And again, it depends where you're playing in microcaps too.
Yeah, I definitely agree with that one. That's one I hear quite often.
Mm-hmm. Yeah. And I guess lastly, like for me, access is very critical here with management teams. If you're really on it, you're building relationships with a lot of these management teams, and you get to know them, you get to understand them, you really can understand the vision that they have. And it's harder, again, to do that, I think, in larger cap names where you're not typically getting access to the CEO as much unless you're at a big firm. So I think that really helps you understand what's going on and gives you an advantage, frankly.
100%. The one thing that actually stood out in this 2023 paper versus the one in 2016 to me, and this is, I definitely have seen this across the board, is how you bring up international microcaps. And how you go on MicroCap Club right there. Like I think just on page 1, like the most recently featured companies are all Poland. I think I saw a Greek company,
Poland,
London. Greek. These amazing investors are looking, beyond even beyond Canada. Right? Like that used to be like, wow, international microcap investing. It's like, we're going to go to Canada.
I've never made a lot of money in Canada. That's always been a tough one for me.
But like, I think that was a really interesting point as well, is like now just start it, because again, there's been newer names coming, public in the US and kind of, but it hasn't been as much. So you're kind of cycling through a lot of more or less the same ideas. And rightly so in some senses, because like a lot of, even the quality names have taken, 40, 50, 60% haircuts. So it's okay. It's maybe worth looking at some of these names that I've known forever. But at the same time, there's like a little bit of fatigue, and now you're starting to kind of look at other markets to see, all right, what is the best microcap in Poland? Like what's stopping me from looking at that?
Right. Yeah, I would agree. International microcaps are newer for me, but I think they have a place in a portfolio, and you can structure it either as being very all international and really trying to match the MSCI microcap index, or you can layer it into a more domestically oriented fund to sort of give you that upside for names that are not in your universe here domestically. So I'm a big believer in a few markets. I would probably focus on the developed ones because that just seems that, as you get, there's a lot. This universe gets really big really quickly if you go to the whole world. I've found Sweden and the Nordics to be a really fascinating place to look at. They're very shareholder friendly. They have a lot of roll up opportunities there. You can find names there that are like, a Fastenal in the US that are just much smaller because the market's smaller. So you can kind of take ideas maybe in the US that are much bigger and say, my gosh, it's the same kind of company, but it's a microcap. And so I can potentially invest in something much earlier in its growth phase. But yeah, I would agree. You have the opportunity to find better companies potentially. Like if it's an aerospace company and it doesn't exist in the US, or the one in the US is not as good, you can find the best of breed. And then you can also take advantage of valuation discrepancies where a company may just be cheaper because Europe sold off, and now you have an opportunity to buy something better at a lower valuation. And they've actually done well. I think there's, when I did a look at sort of what markets did the best, technology in the US has done the best out of anything anywhere in the world. But it was surprising to see that the Japanese index and the Swedish index have done really well over the last 20 years. And so I find the Nordics and also Japan, which is a little harder to invest in for an American investor because of some cultural differences and language differences, but Japan's very rich with a lot of small, high quality companies. And so I would begin my search kind of there, probably like Northern Europe and Japan would be kind of where I would focus. And I think there's a lot of good stuff there. Just the hard part is really getting to know them intimately and feeling like you have that understanding of them being not there. That would be the offset there. But I agree. I think it's a fascinating thing. And I think when you think of inefficiency, as you go down cap, you get inefficiency. As you go international, you can get inefficiency. So you combine those two together, and you potentially can add a lot of value if you do it right.
100%. And to be fair, like this isn't for, this takes a lot of work, It takes a lot of work. And I'm not trying to say that to scare anybody, but just, I don't want to sound like, this is the easiest thing since sliced bread. Like, oh yeah, just go to Sweden.
I mean,
go check out the best one there.
Ideally, what I've thought a lot about this, and ideally, you would be probably in a firm that has an office in Japan, an office in the UK, or somewhere over there, and so you would have some boots on the ground that were doing other things that sort of could help you feed ideas in. I mean, that to me would be the ideal scenario, because you would have a team that would help you.
Yeah. No, I got to check back on my, we did a stock pitch World Cup at our virtual last December. And I've been meaning to share some of the more updated results. Cause I said after a year, this is your prize, for the winning team and the winning picker. Right. So I got to go back and see, I got to double check on the results of that and see how each team is doing. I'm like, I have my thoughts. And my initial thinking is, I think Team Europe might be slightly, but I could, don't take my word for it. Anybody listening closely, like I could be totally. But another thing I wanted to talk to you about, and we'll bounce around a little bit too. I might come back to the white paper and whatnot. But in your time over at Wellington, you have on LinkedIn that you were also as an equity analyst, you were kind of focused on tech and industrials, consumer. I figured we kind of take a look at each of those sectors right now, because it's specifically to microcaps. And so starting with industrials, where are we at? What have you been seeing? What are some of the macro trends that you've been seeing that folks maybe could either take advantage of or use that information to look at some of their microcaps or reevaluate some microcaps within their portfolio?
Yeah, I think the industrial complex has done quite well over the last. It's done very well, and I've covered industrial, so I'm a little biased, but they tend to be a pretty good sector to cover, because they don't get disintermediated a whole lot. They are cyclical, but they have tended to do pretty well over time. They've done very well. And it's sort of odd because the ISM is very low, and typically you would see a lot of the shorter run industrials kind of trading in line with the weaker ISM sort of data. And I would look at distributors as being sort of front and center there, but they've all done very well. And so I think we're in this spot where it's a little tricky, because industrials have done so well despite very weak ISM data. I think the other side of industrials, which is really a backlog business, I think aerospace is the prime example there, but anything with backlog has done really well because of supply chain issues. And so these backlogs ballooned, they got really big. Those margins in backlog have improved because pricing's been strong with inflation. And so your industrials are benefiting a bit on the past, on these backlog ones. And so the jury's out whether the demand will be there to continue to build the backlogs. They'll probably shrink. And those businesses those stocks tend to work on backlog. So as backlog shrinks, I'm a little skeptical that they can really outperform. But I've been thinking a little bit more, even the shorter run stocks that have worked, if the ISM is basing, those should work. And that would go for transports have been really, really weak, given that they were so strong. They're big COVID beneficiaries. Spot prices in truckload are back to where they were in, pre-COVID levels. I think, even though those stocks have done okay, they haven't been disasters, which is always, I think, tricky. If the stocks have been really weak and the spot data is really weak, you could say, okay, I think it's basing. I'm setting up for the recovery. But in this case, these stocks have done fairly well despite very weak spot data. So that makes it a little harder to invest. But I think I would be aiming a little bit for a recovery in short cycle, but with the caveat that the stocks have done pretty well.
Absolutely. And we were even talking offline just before we came on here, and we were discussing how AI has kind of influenced a little bit the industrial sector a little bit. Can you give some of your thoughts there?
Yeah. I mean, I'm not an AI expert by any stretch. But
I don't even trust anyone that says they're an AI expert. Let's just put it like that.
I've heard a lot of people talk about it. And it's funny because, if you go back right before the AI thing really took NVIDIA up to whatever it went up to, everybody was thinking there was a recession coming. And I think it's, for most active managers, we're fully invested. We don't really go to cash. And so, the recession doesn't matter to most because they're not going to do much to actually change what they're doing. They might, go out of some cyclical names into more stable names, or they might generate a little cash to sort of buffer it. But it's very hard for an active manager to sort of bet on market, the recession coming. And I've often thought that rolling recessions by sector, not really by the total macro just imploding. And you'll get those every once in a while. Like the financial crisis was a all economy, crisis. I guess COVID was like that, but it was much shorter in duration. So I think right now we're going through just a lot of different cycles by industry. And the AI thing dramatically changed the game for, it kind of took the recession off the table from the stock market perspective, because it drove tech up, but it drove everything up to some degree. And I think in these sort of situations, AI is going to be something real. It will change industries, but it's just automating. I don't think it's anything new. It's automating. It's automation is what it is. And automation's been a big theme in the robotic side and all that. So I think it's real. I would just be very cautious to know which players are going to actually win from it. And it's a scary game. Like, I don't know what NVIDIA is trading at, but are they going to be the only winner? I don't know. So I think it's always tough in these situations to really get it right. Because nobody knows exactly what it's going to look like.
100%. Yeah. Oh, totally.
Yeah,
don't worry.
Yeah.
There's been a few name changes. Let's just put it like that, right?
Yeah, right.
Hey, real quick.
AI. My ticker's AI.
Yeah, exactly. AI.V, AI. And if those tickers exist, I don't know. I'm not a shareholder. I'm just saying. By the way, real quick, are you an NVIDIA shareholder?
I'm not.
Okay.
I'm not.
So, all right. So we covered industrials, covered AI a little bit here. Let's talk also tech, maybe a little consumer as well. I mean, from a microcap perspective, I want to hear your thoughts first, and then I'll give a couple takes as well.
Yeah. I mean, on the consumer front, I think that consumers always, I think, a much, much trickier place to play. It is more fickle. It is, I think consumer really comes down to, I think it's three things. It's, your same store sales growth, is it accelerating or not? Your unit growth, I think, is the most important thing, and your margin. Those three things are what you want to focus on, I think, with a consumer name. And so I've tried to find names where there's unit growth, because same store sales, you want to be positive, but they can only be above market for so long. They kind of go back to a normalization, whereas a good concept that can grow units, I think has real potential. So the ones I focused on have been those where you have some unit growth, and hopefully it's around 10% is kind of what I've tried to focus on there. And then I guess within tech, which I've been less active in, I'm very fascinated at the intersection of software and payments. So I've done more on the software side than I have on the semi side. And, when you can find software payments together, I think it's a very powerful combination. And there's definitely been a few microcap names that have embraced that philosophy. Yeah.
Yeah. No, I was going to say, on the consumer side, especially within microcaps, it's been definitely, there's been some names that are kind of starting to work, but I've seen more roll-ups. Mm-hmm. Like I've been seeing more like holding codes that are like, they're just starting to buy up more brands that maybe have shown that they built a little bit of a base, and then they come into more of like a holding structure, and then they have a little more access to free cash from all those other businesses. So that's why I've been seeing a little bit more on the consumer side. Just from various opportunities out there. Tech side, it's kind of it's been more or less mimicking what the general microcap market has been doing. It's just like they've been winning some interesting contracts and plays, or better earnings than they've ever had, and it's completely fallen on deaf ears. It's been more or less the same on that front.
At
least in talking in many of my conversations. So, getting back to kind of the, I guess, state of I guess the state of microcaps in 2023. You know, we're recording this on Friday, August 18th. You know, one of the biggest questions that we keep talking about, and it almost seems silly to try and predict, but at the end of the day, like, it's something that I think we want to get as many opinions on as possible, so that we can kind of come up with maybe a data set to figure out where we might be going. So in terms, I'd love to get your opinion on when you think some of this sentiment might change in microcaps, because it's clearly we're now going on almost 2 years of a negative sentiment. I'm not saying like exactly the date things will change,
right?
But more of your opinion on what are the various factors that could lead to at least this sentiment starting to turn.
Yeah, I mean, I would go back to, you know, given that there's less technology in microcap than in the larger caps, you know, you could, if you get a cyclical recovery in some of these, on the industrial side, you know, that could just help by virtue of the fact that industrial and cyclicals are bigger in that index. I've heard higher rates could be better overall for smaller cap stocks. I was reading an article today on that, but I don't have a lot to back that up with. So that could be something. I mean, you know, I did think they were neglected, and we would see pretty good outperformance in small cap over large, but that just hasn't happened. And so, yeah, I would sort of look at more of the cyclical recovery aspect. And I would say if rates continue to climb, which they have been recently, you know, that definitely puts a headwind on multiples especially for tech stocks. So to me, that's a big thing. I just think the hard part is, you know, big tech just really dominates. It dominates the economy, and it dominates the market. And as long as those big five or whatever are doing well, it's going to be hard for the other stocks to compete. I mean, that I think is the hard part. And I think the bigger picture here is that I think one of the big headwinds overall to the equity market is that private equity, you know, is much bigger, and stocks don't go public until they're much bigger. And so, I mean, Amazon was a microcap, you know, Amazon was a microcap. Yeah. That would never happen today. You know, there's no Amazon is going to be a microcap again. So that to me is also kind of this overall headwind. And things can change, but I would say that
maybe just in the US, maybe in other markets, maybe, you know, but
yeah, absolutely.
Right.
Yeah.
You know, I mean, that's one of the reasons we're going to Vancouver, is because, you know, we've seen, you know, quite a few investors I respect up there have done extremely well investing in Canadian tech. You know, because it's just been completely overlooked. You know, I mean, not just because it's a Canadian microcap, just that alone, but it's also completely buried by materials. You know.
Right.
So, So
yeah.
You know, I like. Well, I don't know whether I like it or not. I don't mean it like this, but one aspect of your white paper, coming back to that real quick, when you're looking at, you put in the very end talking about the fund landscape. And this is very interesting to me. And I think that any IROs that are listening to this should probably also pay close attention to this number. When you say, and I quote here, the number of active microcap funds in existence today is around 70. And
that's what I counted it. Yeah.
And the number of active microcap mutual funds is around 15 compared to 460 small cap mutual funds. And that's just something to really keep in mind as to like how big this actual universe of just institutional universe really is on the buy side. Yeah. And that's just, I just want to take a second and let that sink in, because that's a really interesting number. And I don't think it, whether it's plus or minus 10 even.
Yeah.
Even if there's 100 like that, love to hear more of your thoughts there too, because it's hard being a solely microcap focused fund, because if you're successful within, look at Connor Haley, Altifox, right? Like one of the best microcap investors there is out there. You started in 2018. He's basically micro at this point because you kind of have to be.
Right.
You know?
So, I mean, I do. So I think first of all, one big question I have is the mutual fund structure the right structure? And I think that's very debatable. You know, my mutual funds have a lot of flaws to them, and so And they're very expensive. And so if you're launching a fund, I personally think mutual funds are probably not the best vehicle to use to launch it. So therein lies the discrepancy between you have 70 funds and only 15 mutual funds. I think it's, as we've talked about, I think it's very hard to be a standalone solely microcap manager. I've always believed that focus is important to anybody, but I sort of believe, a good microcap fund at a bigger firm would make a lot of sense, because if a firm already has a small cap fund and maybe it has a venture fund, having a microcap fund in the middle there really can help out, because it helps the underlying investors to that asset manager are going to benefit from this inefficiency and this asset class, which is uncorrelated the most with the equity markets. And additionally, the microcap fund can be a feeder to small cap, and vice versa. When things get really ugly, small cap stocks become microcap stocks, and that can help the microcap fund. So I've often believed they can kind of help each other out if they're in a bigger fund organization. That number has grown the least, I think, in the last 5 years. So we've seen we have not seen a lot of new funds launch. There have been some, but I think that number is the lowest it's been in the last 5 years. But yeah.
No, it's super interesting, because at the end of the day, if I was to start a fund right now here in August 2023, I think everyone and their mother would probably tell you, well, you should if you actually want to raise capital, you probably want to do SMicro. That's the only way, at least to get capital in the door. And then, they look at the top 10 holdings, wait, why are all these under 250 million right here? Don't worry. Our largest allocation is these four, they're billion and above, but it just makes the most sense, at least right now. If you're going to start.
I think especially for somebody who's a smaller firm, micro and small, I think they make a lot of sense, because replication of a large cap index is pretty easy. Replication of a micro or small cap index is much harder. And so it just sort of lends itself, I think, if you're thinking about another fund, I think it lends itself to that. And the access, we mentioned access, a smaller investor can get pretty good access in micro and small. It's harder for if you have a small fund to be like, oh, I'm talking to Boeing and I'm talking to, the management team at Boeing. It just doesn't happen. So there's an access angle there too.
100%. No, look, we got we've always stayed in touch over the years, but we got reconnected by your brother from another mother, Doug Porter from Acuitas.
That's right. Great guy.
And we talk, it's fascinating, because they're on the allocation front, and it's you kind of have to find the right sources of capital right now, because at the end of the day, the other thing that you hear from potential allocators is all right, well, why should I allocate capital to you right now when microcaps not necessarily getting killed? If you're an active manager, almost every quality investor I've seen has done decently well this year. But some of those might be saying, well, why take the risk when I can just do, I can get 4 to 5% and some of these more whatchamacallit,
treasury bonds,
all that kind of stuff, so there's been also just a lot of dry powder in that sense too, with regard to microcaps or any microcap strategy, because they're just saying, I might do nothing, and then here you go.
Right.
So that's been an interesting phenomenon.
Absolutely, it has.
So look, I've pretty much covered everything I wanted to chat with you on today. Is there any final thoughts with regard to microcaps? Maybe you want to talk about what you're looking to do, some things like that. Close us out here, man.
Yeah. So, I have been exploring different things to do, and microcaps are near and dear to my heart. I've spent a lot of time on them, and ideally, I would love to, I think, launch a fund either on my own or with partnering with somebody else. And, that's kind of what I keep coming back to. I do think it's a very underfollowed space. I do think it's very interesting. And I think if you do it, if you've done it before and you have, the acumen for it, you have the investing experience, and then you have the knowledge of the companies, which I think that's really where the time element helps. Like if you've covered it a long time, you know there's a lot of names in there, and you know maybe 75% of them. You've been around them, you know them, and you know which ones you want to own and which ones you want to avoid. And then it comes down to, with good screening and modeling, you can figure out which ones when you want to own that 75% basket or whatever, and crafting a portfolio around that, and then weighting it appropriately. I mean, all that requires a lot of hands-on work, and I think there can be significant value creation. And the key will be, you really want to obviously beat your index, but you really want to, I think, for the investor, deliver something that is relevant to the overall market too. Can you beat the market? Is kind of what I think people want. And so that's kind of the goal,
100%
right now. So
all right, dude. Well, I think we're there, man. So Dom,
cool.
where can our audience go and find more information, get in touch with you? What's the best way to
I would say probably LinkedIn. Just look at my LinkedIn profile, and I think all my contact information's there. So if you want to talk, message me. Happy to talk to anybody.
Very cool. Well, Don, it's great to reconnect. Thank you again for jumping on the pod. I really appreciate it. And
appreciate
forward to our next update.
It's great. All right. Thanks. Talk to you. Okay. Bye.
This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet MicroCap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast.